How do you view Fannie Mae's stock and options today?
Okay. Well, I think I'd broaden it to Freddie Mac too. I think both of these companies, you know, have a great business, and I always look at the stock market. I think of it more. If people study chess, this would be not a good game to study for the stock market, because in chess, an outstanding player will beat a good player 1,000 times in a row. Everything's in front of you, all the moves are known, it's all technique. In poker or in bridge, there's a lot of uncertainties, there's a lot of things you don't know. You can play a hand exactly right and lose. You say, well, I played it right, if I do it again over a night, over a month, I'll do it. That's the stock market. The stock market is much closer to poker than it is to than any other game. And I think that's what's the important thing to know. And what the hell was the question? Fannie Mae has been sort of like a 27-card stud poker game, you know, over 12 years. Cards keep getting turned over, like we're not doing so well in Houston, and this is 10 or 12 years ago, and with these 5% downs that a lot of people had in mortgages, and people moved there for jobs, and the job, they brought their spouse along there, and the job left, they had no ties to those communities, and they left, or in Oklahoma or in Alaska. So when that card turned over, it was kind of ugly. And then they were losing $1 million a day. That was easy to remember. That wasn't too pleasant. And what they finally figured out was we have a very good business. We're extremely low cost. And if we can match our liabilities and our assets, make a very small spread, but we have very low costs, we can have a pretty good business. And then a card would come over like real estate prices started to go down in California. They started to go down in the Northeast. So then you had to say, well, I better keep checking to see what foreclosures going to be like. And you must own, that doesn't own any Fannie Mae. But so anyway, so all these things, if you keep watching the story, every year you get a chance to buy this again. Because something will come up. People were worried that rates were going to go down. So the stock went down because rates are going down. And then now interest rates going up, the stock's going down because interest rates going up. And Freddie Mac and Fannie Mae are still doing great. And I think they're going to be terrific stocks. I mean, they're not going to quadruple, but I think they're about 25% undervalued now. And they'll be good stocks to own for 5 years.